Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets for April 21st, 2026. It's been a wild day with plenty to unpack, from geopolitical tensions to AI-driven optimism, and even some drama at the Federal Reserve. So grab a coffee and let's dive into what's moving the needle for us long-term investors, while also keeping an eye on those short-term swings. First up, let's talk about the broader market. It was a bit of a rough session today, as major indexes pulled back after a strong start. The Dow Jones slipped about 0.5%, while the S&P 500 and Nasdaq each shed a little over 0.5% as well. The Russell 2000 took a harder hit, dropping a full percentage point. Volatility is creeping up too, with the VIX jumping over 3%, signaling some jitters among investors. What's behind this? Well, a mix of uncertainty around the U.S.-Iran ceasefire talks and the looming confirmation hearing for Fed Chair nominee Kevin Warsh are keeping folks on edge. Speaking of Warsh, the Fed drama is stealing headlines. His Senate hearing today was a grilling, with questions about his independence from political influence and past policy errors at the Fed. Warsh is pushing a narrative of regime change, arguing the central bank has lost credibility and needs to stay in its lane. For us long-term investors, this matters big time. Fed policy shapes interest rates and economic stability, which are the bedrock of our portfolio growth. Short-term, though, his comments and potential rate decisions could swing markets, so keep an eye on how this confirmation plays out. Now let's shift to some standout performers. On the winning side, tech continues to show strength despite the broader market dip. Intel surged nearly 5%, riding the wave of AI and semiconductor demand. Advanced Micro Devices also had a solid day, climbing over 3%, and companies like Corning and Spotify saw nice gains too. These moves highlight the ongoing appetite for tech exposure, especially in AI-related plays, which remain a core focus for long-term growth strategies. On the flip side, we've got some notable decliners. Tesla took a hit, dropping over 5%, as concerns around delivery numbers and broader EV market softness weigh on sentiment. GE Aerospace also stumbled, down nearly 4%, alongside names like ASML and Intuitive Surgical. For us long-term folks, these dips could be buying opportunities if the fundamentals hold, but short-term volatility in these names reminds us to stay diversified and not chase every headline. Looking at the most active stocks, NVIDIA continues to dominate trading volume with a slight uptick, showing persistent investor interest in AI leaders. Tesla, despite its drop, also saw heavy action alongside Intel and Nokia, which popped over 6%. High volume often signals where the market's attention is, and for us, it's a reminder to watch these names for potential momentum shifts, even if we're playing the long game. Diving into the market movers, NVIDIA and Amazon are still key players, with NVIDIA edging up and Amazon slightly down. Tesla's slide stands out among the heavyweights, while Netflix gained over 3% post-earnings, showing content strength. Micron and Palantir also caught attention with mixed moves. These big names often set the tone for market sentiment, and for long-term investors, they're core holdings to monitor for secular growth trends like AI and cloud computing. Let's talk earnings, as it's a busy week ahead with some heavy hitters reporting. Companies like Intel, Alphabet, and United Health are on deck, and their results could sway sector sentiment. We've already seen United Health beat expectations with a strong Q1, pushing shares up 9%, which bodes well for healthcare exposure. GE Aerospace also topped estimates, though margin pressures linger. For us long-term investors, earnings are a window into operational health. Focus on guidance and growth drivers rather than just the headline numbers. Short-term, though, expect some choppiness as the market reacts to each report. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into what these companies are saying about the future. Over the past week, some large-cap names have posted impressive gains. Garmin led the pack with a massive 21% jump, while Lumentum Holdings and AppLovin each climbed around 15%. Shopify and Occidental Petroleum also saw double-digit gains. These weekly movers underscore pockets of strength, especially in tech and energy, and for long-term portfolios, they're worth watching for sustained momentum. On the other hand, some big names struggled this week. Genuine Parts cratered over 20%, while Rivian and Blue Owl Capital each dropped more than 13%. Okta and BridgeBio also saw significant declines. These weekly losers remind us that even in a bull market, there are always sectors or companies facing headwinds, something to consider when rebalancing for the long haul. Sector-wise, industrials topped the charts this week with a 2% gain, followed by consumer cyclicals up over 1.5%. Energy also showed strength, climbing on geopolitical tensions. These sector moves highlight where capital is flowing right now, and for long-term investors, industrials and energy could offer durable exposure if global demand holds up. On the weaker side, healthcare lagged with a slight decline, while utilities and financials also underperformed. These sectors are often seen as defensive, so their softness could signal a rotation into riskier assets in the short term. For us, it's a reminder to maintain balance in our portfolios, especially during uncertain times. Wrapping up the market action, it's clear we're in a push-and-pull environment. Geopolitical risks, like the U.S.-RAS, Iran conflict, and Strait of Hormuz closure, are creating uncertainty, with some analysts warning of a potential repricing if tensions escalate. Yet, AI optimism and strong corporate earnings are providing a counterbalance, pushing certain sectors higher. For long-term investors, this duality means staying focused on quality companies with strong fundamentals while being mindful of short-term noise. An advanced insight here: watch the divergence between physical and paper oil prices as a leading indicator of supply chain stress impacting broader markets. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on key stocks and trends. See you tomorrow for more actionable updates.